Hello to everyone. My name is Anis and I am the founding community of practice analysts. Welcome to our very last webinar for 2023. This one will be on the design of IFAD's first regional private sector operation, ARCAFIM, which stands for the Africa Rural Climate Adaptation Finance Mechanism. And this webinar is co-organized and promoted by IFAD's Inclusive Rural Finance Network and PARM, which is hosted by the Platform for Agricultural Risk Management. Just for you to know, this session is recorded and will be available on PARM's website. And you are more than welcome to ask your question and your reflection on the chat box that you will find on the bottom of your screen. And then the speakers will direct them during the question and answer session. Also, I would like to let you know that at the end of this webinar, there will be an automatic survey that will appear on your screen for you to give us some feedback. I will also share on the chat box a link to our FAMD community of practice, which is an interactive forum on agricultural risk management, where hundreds of practitioners from all around the world just come together to share knowledge and best practices. So if you want to join us there, it is great. And just before passing you the floor, Sauli, I will present our experts for today's session. So welcome to you, Paxina Chileche. You're the adaptation specialist in IFAD. You support the design and implementation of projects to build resilience of smallholders to climate finance, and you also support climate risk analysis for projects at entry and during implementation through IFAD's social environment and climate assessment procedures. We also welcome Kenji Shundo, who joined IFAD in 2022 as a senior private sector specialist within the private sector advisory and implementation unit, and he mainly works to enhance impact investing in Africa. Our moderator today, Sauli Yuri, he's the senior regional specialist at IFAD, Sustainable Production Markets and Institutions Division for the East and Southern Africa region, and he has more than 10 years of work experience in the field of inclusive economic development. And also we have with us Stefania Lenocci, who is the head of the Private Sector Advisory and Implementation Unit in IFAD since February 2020. And this unit mainly acts as the main coordinating unit for the implementation of IFAD's private sector engagement strategy. And she will be able to answer your question during the Q&A session. And now I will leave you the floor, Sauli. Over to you.
Okay, thank you very much for the introduction, and hi all. Nice to see a good amount of people interested in the ARCAFIM project and design process. So we have the good news that the ARCAFIM was launched at the COP28 just recently, a week ago or so. And we have all the approvals by the different co-financiers and also from IFAD board. Thanks to quite a lot of work that went into this by unit. Stefania is here with us, and Kenji, and by ECG and by ESA PMD colleagues, but also other lots of people were contributing to this effort. So it's approved and the design process is completed. And now is what's now happening is the documentation phase, to which Kenji will speak a bit more later, and the capacity building phase of the project partners, so that we can successfully launch the program activities or the funds flow in the next year. So let me share my screen. We want to do today. So basically, we want to do two sessions today. First one is on the basic let's say, how the structure of ARCAFIM is. So we'll speak to overview of the structure. I will do a presentation. Then Kenji will speak to the financial structure of the project. Then Paxina will speak to environmental social management framework of the program. Thereafter, we'll have a Q&A session on these aspects, and then after that, we'll move to another second part of this webinar, which is more on the design flow or design process for such type of regional non-sovereign operation with external financing, which was quite a complex exercise. So we'll have another conversation on that one after. So let me share a screen now so that I will first speak to the design a little bit. So here is the presentation. So ARCAFIM is the name of the project, Africa Rural Climate Adaptation Financing Mechanism. It's a non-sovereign operation indeed. So it's a private sector direct investment in the ESA region. The starting point for coming to this design, or the very beginnings of our conversations, were that there's insufficient financing going into adaptation financing of smallholder farmers. This slide here tries to represent that situation. So basically, there's quite a significant amount of climate financing already flowing, which is more than $600 billion, but only 14 of that goes to the agriculture, forestry, and land use. Out of that, the mitigation part is 90% of the total climate financing, and adaptation only 7%. So there's very limited amount going to adaptation compared to mitigation investments, despite the growing needs and the requirements to achieve climate justice. Then out of the overall budget for climate financing, only 1.7% goes to the smallholder farmers. Even if we know that such a huge amount of global food production come from the small producers, 1/3, and in African continent, for example, about 70% of the food production come from smallholder farmers, and they're the most directly impacted by climate change. But yet, despite that, only 1.7% of climate financing going to this target. And then we also see on the other side of the slide the actual needs. So even the total volume, 600 billion, is quite significant. But if you compare that with the actual needs for climate financing, per the analysis done by Climate Policy Institute, is completely insufficient. And then out of this insufficient amount, only such small amount going for the small producers. So we really need urgently initiatives and interventions to set up climate adaptation financing operations that can speed up, mobilizing funds for the adaptation of the smallholder producers. And basically our take at IFAD is that we need not only to do the public sector interventions for this, but in order to reach such scale, we need also to get the private sector into this. So now, how to do it? This was our mission to achieve increasing climate adaptation financing through private sector into this space. And what we're proposing, or what is the solution that has now been approved already, not anymore only proposing. It is that IFAD and our partners will offer blended finance and climate change adaptation innovations through local financial institutions, which then lead to the implementation of climate change adaptation innovations through lending products and promoting CCA finance among farmers and small companies. What are the main pillars? First one is the investment pillar. So we have $180 million of lending facility, which is split between international funding that is facilitated by IFAD and Equity Bank, who is our key partner in the region, who provides the other half of that funding. Then we have a technical assistance pillar, which is $20 million, financed by GCF, Denmark, and IFAD's supplementary resources. Then we have, within the technical assistance pillar, we have the capacity building elements, which is targeting the financial institutions that are participating in this operation, with the objective that they have the tools and the lending products and the knowledge and the know-how across their organizations to actually finance climate adaptation through their core resources and through the ARCAFIM resources. So it's a kind of we try to help transformation of these organizations so that they're able to provide climate adaptation investments. And on the other hand, the demand side, so the recipients of financing, the clients who are the smallholders and the companies. So we also offer capacity building for them through this TA facility, so that they are better at position to apply for funds from financial institutions, but also that they can do business plans that have the climate adaptation and resilience element. Then policy dialogue work, so to ensure that there is sufficient enabling environment in terms of legal and policies and supervision structures in the target countries to enable, that the CCA financing is taking place, but also is regulated, and also that it is that it receives the rewards as required from through the policy environment. So that then a little bit on the implementation model or the structure. Very briefly, so this is of course a summary. So we just have the basic elements here. IFAD is offering the loans and also coordination support to the program. So we are facilitating the entire ARCAFIM. Then the borrower or the direct client of the project is the equity bank in Kenya, who then manage the TA facility and the lending facility at their end, the equity bank Kenya subsidiary. Then they then do direct lending through the Kenya operations, but also they offer other subsidiaries, Uganda, Rwanda, Tanzania, resources for investment in those countries, who then provide loans to end clients, which are the MSMEs and smallholder farmers. So this is direct and indirect. So that means that not only directly from equity banks branches, but also through their financial intermediary partners. So they may have SACCOs or MFIs or value chain lead companies who may take wholesale loans or bulk loans for on lending to the end clients of this operation. So that's the structure. Now the next question is why do we want to invest in Kenya, Rwanda, Tanzania, Uganda? So these are the 4 first countries where the ARCAFIM project is targeting. This is the first phase of the ARCAFIM. So we are intent to do. Right now we have in pipeline 2 phases. First phase in East Africa and second phase in Southern Africa. And the Southern African countries so far planned are Angola, Zambia, Malawi, Lesotho, and possibly also Mozambique. But this is still under discussion, the second phase. Why these countries? They have to be, or the idea is that we only invest in the low-income, lower and middle-income countries through this instrument. Also that there must be high climate stress and high policy priority in those countries to invest in adaptation. Then there must be substantial markets to invest in such type of investments, but also that the host bank has a capacity and network to run it. So in East Africa, indeed, Equity Bank has a strong footprint in those target countries, and in the south we are negotiating with another one. And then the last one is the high potential linkages with the IFAD portfolio. So meaning that if we have value chain projects in the target countries, that makes it easier for us then to identify pipeline for lending and provide also additional technical assistance through the value chain program or climate adaptation program or agriculture programs. Then why would we have selected Equity Bank or not another bank? So it was a long process. So we worked a lot on the identification of the appropriate partner. And what were the key criteria? Firstly, it has to be a leading commercial bank that has a strong footprint, but also work kind of like an example for the industry. And a credible growth, including not only for agriculture, but also CCA financing. Then commitment, like high commitment to participate in the design process and then eventually in the management of the operation. And then very strong ESG management systems. And also in this case of Equity Bank, they're also a long-standing partner with IFAD across a number of operations that we do together with Equity Bank in the past. So who are we focusing on? What are the target groups for IFAD in the ARCAFIM? Small producers and rural micro enterprises are the key foremost target group. Actually, the small producers, the most prominent target group. Then the micro enterprises and the SMEs are kind of secondary, but also only in cases where they are linked to the small scale producers in the rural areas. So if they offer income opportunities, employment opportunities, but also like value chain coordination type of services to the small scale producers. So they may be off-takers of the small producers, or they may be offering them mechanization services or input materials or something else. So it's a kind of something that has to be a linkage there. So there cannot be any SME in the rural areas, but something that has this inclusive value chain approach. Then how do we ensure our targeting and focus? There's a very strict eligibility criteria that only those certain types of investments can be done, and only certain types of end clients are eligible to receive resources from ARCAFIM resources. Then we have the TA component that will be used strategically to ensure that we will work with the target group, so that we have a bit more of a handle. Then we have also dedicated gender and inclusion strategy for the program. Then we have a taxonomy, which is something interesting, a little bit of a new element of the ARCAFIM program. So we have developed this kind of a taxonomy approach, whereby we first discuss what are the eligible investment types for ARCAFIM climate adaptation financing, which starts from mapping the hazards. So we have water deficit, temperature, stress. So basically, if there's droughts and high temperatures in certain areas, then that causes certain problems from climate adaptation needs. Then there may be, on the other hand, it may be that there is water excess or flooding, so there may be too much rain that coming suddenly or in unexpected intervals. So there may be those, or a combination of the two. Sometimes it happens that you get a long period of no rains, and then suddenly it rains during a week a lot, and then all the land gets destroyed. So there are like different kind of combinations of these two water-related issue that requires a certain type of investment to manage that situation. Then there may be heavy winds and storms, especially in the coastal areas towards the Pacific Ocean in the Eastern African coastline. Lots of storms are hitting the various countries, hurricanes, and I don't know what they are, like all these very severe conditions in the Eastern African landscape that destroys hundreds or thousands or hundreds of thousands of hectares of land every year in the different countries, and impacts so many households. That has to be that then requires firstly disaster recovery, but also adaptation possibilities for these. Maybe not in the center of those tropical storms, but especially if you are a little bit outside the tropical storm, like let's say some kilometers away from the center, then certain type of adaptation protection measures can help you to not to have a full disaster in your harvest. Then soil depletion. So what is the situation in the different agroecological zones where you have droughts or already desertification impact of the climate change, but also simply overuse of soils sometimes that leads to weakening soil quality. So anyway, so these are the hazard types that we have mapped, and then we have the different type of target groups. And then we try to cross-reference between, if you have a small-scale crop producer, or you have a small-scale livestock or aquaculture producer, or an MSME working in these value chains, what would be the specific type of interventions that we can do in order to address the different types of hazards that are identified to be happening because of the climate change. And then we're able to consider that all of these type of investments will be eligible for ARCAFIM utilization. That constitutes the heart of the eligibility criteria for our climate change adaptation investments through this project. Then, so that's the first one. This is the eligibility, and then there's a second layer to the taxonomy, which is the recommendation side. So, which basically says that we can do a bit more detailed analysis on certain crop in a certain agroecological zone in a certain country, and then we can see what may be the trend. Whether, like for example, we see Arabica coffee in a certain this is humid, so it's those tropical humid areas of Uganda. We can see here that the peaks are very high and low, so there may be some years where the productivity of these yields can go down significantly. So we know that we need to be ready for quite some hits in your production system. whereas cassava seems to be much more stable in terms of productivity under the changing climatic environment in this same area. So, what can then be the recommendations? Firstly, obviously, for a financial institution, that cassava is relatively stable. Coffee may have take some hit from in the future, and then we need some measures if one wants to continue investing in coffee. What type of investments you can do? Here's some examples illustrated for what can be done in order to address those problems. Now, what IFAD did additionally, so we obviously worked on the financial a lot. So we were doing resource mobilization over the last couple of years. So we finally got co-financing from GCF for the most part of the program. Then Nordic Partners, the other half of the program cost, including from Finland, Denmark, and the Nordic Development Fund. And then IFAD puts in some fund from our own budgets. And then in addition to resource mobilization, we also work as an assembler and help to structure the operation and manage the fund flow. Kenji will speak more to it soon. And then on the non-financial side, I actually spoke already to most of this. So we're working a lot on the different technical aspects of this ARCAFIM design. It wouldn't exist without us, of course. The expected result summary. So we have that $200 million of a budget for the ARCAFIM, which will then accumulate up to $700 million of investments over the 12 years. Most of it will go to the small producers, like I said in the beginning, and some of it will go to the SMEs and micro enterprise side. Then we expect about 300,000 households to be the direct beneficiaries. And in these households, we'll have, about 1.5 million people as household members. So that's the outreach. And then we'll do trainings and financial services through approximately expected 25 participating financial institutions to offer the actual services, the financial services to this target group. I think that was my last slide. Yes. So maybe I'll now stop sharing. And then I'll hand to Kenji.
Can you see my screen?
Okay. Yes.
Okay, sure. Yeah, thank you, Sauli. Yeah, I just briefly described the financial structure of the ARCAFIM. Before getting into the detail, ARCAFIM is, from the finance perspective, we categorize this facility as a funded risk-sharing facility. And when we say risk-sharing facility, there are two categories. One is funded, and the other is unfunded. So unfunded risk-sharing facility is usually called a guarantee. So if you, for instance, say, CEDA, DFC, FD, IFAD program, those are the risk-sharing facility, but unfunded, which basically takes the form of the guarantee. But this facility is structured as a funded basis, which means that the financial instrument for the facility takes the form of the loan. So we give them the loan upfront. However, we basically share the risk. When the underlying asset have a loss, then we actually cover the loss through the claim process, which is pretty much the same as the guarantee claim process in the unfunded guarantee product. So I think that is why we basically here explain the instrument as a loan as opposed to guarantee, because this is a funded risk-sharing facility. So in the ARCAFIM, downstream and upstream part. The downstream, because basically, as Sauli explained in the implementation modality, IFAD basically act as a lender of record to the equity bank. So we are the lender to the equity bank. However, we basically mobilize the necessary funding from various donors. So that is the upstream financing part. So we mobilize 90 million funding, US dollar funding from Green Climate Fund, Nordic Development Fund, and also the government of Finland. And some of the 90 million some portion of the 90 million go to the first loss protection under this risk sharing facility. So, which basically, provide a credit protection to the underlying portfolio of the equity bank for the climate adaptation financing. This 90 million is provided to IFAD through those donors on a limited recourse basis. What I mean by limited recourse basis is that IFAD repayment obligation to the various donors is limited to the obligation to the fund received from the equity bank. So if we receive 10 million from the equity bank as a repayment, then we only have an obligation to pay back 10 million. If we receive 90 million full, then we have an obligation to pay back 90 million to those donors. So basically, which basically means that IFAD doesn't really take any credit risk of the underlying asset because it's a complete pass-through. So that is a structure we embedded into this risk sharing facility. So upstream part, we mobilize 90 million. Then the downstream part, we provide this 90 million to equity. However, the equity bank also needs to provide additional matching amount, 90 million, for their underlying loan, CCA financing to small-scale producers and agri-SMEs. So eventually, 90 plus 90, 180 million, that's the facility size of this of the ARCAFIM. And also, this 180 million is a revolving facility, so that once they receive the loan, receive the repayment from the underlying asset, then they can also reinvest, we call recycling. They can recycle the repayment from the borrower to the next cycle. So if we assume 5 times recycling during the period of 12 years, then we will be able to mobilize almost 900 million of the funding to CCA financing in those 4 countries. So for the downstream part, equity bank provide additional 90 million. Then in total, we have 180 million facility. For Kenya, Equity Bank Kenya will directly provide the loan to the end borrower in Kenya. Then Rwanda, Tanzania, Uganda, they will on-lend part of the loan from IFAD to their affiliates, so that each subsidiary can extend a loan on the ground. Yeah, so the next slide. So this is pretty much the same slide as Saudi explained. So for the Kenya, directly from Kenya, Equity Bank Kenya, then through Uganda, Rwanda, and Tanzania through their subsidiaries. So that's the kind of implementation model for this investment facility. Yeah, that's it from my side. Over to Paxina for E&S.
Thank you very much, Kenji, and good afternoon, all. So briefly speaking about the environment and social management framework that has been developed for the ARCAFIM. And the reason why we developed the framework is because we are using a financial intermediary, or financial intermediaries, in this case, our host bank and the bottom tier, the participating financial institutions, who will all need environment and social management systems, the risk management systems to be in place. But also, we're not very sure right now of the end type of investments that are going to be made. As my colleagues have presented, we have a typology of the investments, but we're not very sure where they're going to be. So in this case, we provide a framework which will guide the environment and social risk management during the implementation of ARCAFIM. So recognizing the different layers of ARCAFIM, and this also relates to IFAD social, environment, and climate assessment procedures, so our SECAP, but also aligned with the Green Climate Fund environment and social risk management strategy and policies that they have in place. So we brought all of this together to be able to develop the environment and social management framework. So right now, what this includes, it recognizes the risk on the environment and social side that will be at the program level, so at the ARCAFIM level overall. And then it also looks at the risks that would be managed at the host bank level, and then also the risks managed by the participating financial institutions. So in this framework, we outline the environmental social policy and standards that are being followed. We also provide an outline of some of the risks that are anticipated, so the ones that will be applicable to the small scale producers that are going to benefit from these resources. And then we also describe how at the different levels the risks can be identified. So we have screening procedures that have been included. And then we also have screening procedures at the different levels, and then also a generic type of environmental social risk management plan. So this enables the risk management to inform the risk management or guide the risk management, but also the monitoring and reporting that has to be done by the different institutions. So here, including in the environmental social management plan, and perhaps I'll speak a little bit about what some of these envisaged risks are. We have also included in the framework document some capacity building requirements that are there for the host bank, so to ensure that there is a team that is available to be able to manage the risk, and also ensure that this is a gender responsive strategy. So ARCAFIM does have a gender and social inclusion strategy and a gender action plan that it also includes the key activities that have to be taken into account to ensure that we are empowering women particularly, and also youth who are a target. We have as clear targets as beneficiaries of ARCAFIM. So turning to some of the risks that have been identified in terms of the environmental social aspects. So this looks at air emissions, particularly if there's going to be any constructions that are being done as a result of the investments that are going to be made. We also envisage potentially some water discharge aspects that may lead to localized pollution. And we also are looking at potential land contamination that may come out of increased use of some of the agrochemicals that may be used by the end investor or the small scale and medium enterprises. Also being able to manage hazardous materials, the agrochemicals as well, and potential impacts from waste. We also included some measures to be able to manage risks such that may emerge from child labor or use of forced labor to ensure that that does not happen within for the beneficiaries and the use of the resources. And then also looking at aspects around gender-based violence, the sexual exploitation, harassment. These were all risks that have been identified, potential risks, and we have included different activities in there or measures that can be applied at the different levels to be able to minimize, to avoid or minimize the risk. The last element looks at supply chain labor risks, and all of these with the potential impact on community or worker health, and also the exposure to diseases. So these are some of the risks that are outlined in the framework document, with potential solutions in terms of managing the risks. So whether it is looking at water use efficiency solutions, such as drip irrigation, also including climate resilient infrastructure that should be constructed. So there will be some guidance that will be given, also focusing on the typology that my colleague Sauli presented for the climate change adaptation activities that would qualify as for investment. And then soil and water conservation measures. So these are measures that would be used usually to manage and control some of the risks. And water harvesting, storage, also turning to insurance, and ensuring that when the monitoring is being done, they can also be reporting to include incidents and any accidents that may happen. So considering that a lot of this will be, there will be private sector investments, these are some of the key elements that we'll look at also in the environment, social, and governance aspects. So this is just a brief on what the environment and social management framework entails, and some of the risks that are going to be monitored and reported on during implementation. So I hand over back to the moderator. Thanks.
Okay, so I don't know, Anais, if you, I think we are ready to go to the question and answer session. Maybe Anais, if you want to help us with that one.
Yes, sure. Thank you very much. So we received already 4 questions, and 2 of them are 2 comments. So I will just read it to you, but you don't have to answer. So someone from IFAD said that we need to take into account that coffee is a typically biannual crop in terms of productivity. And also Armando Cortez congratulated you for your presentation, and especially for the taxonomy, which could be used as building stone for other IFAD's projects. But I do have a question from Puzzo. She thanked you also for your presentation, and she asked, how is the project coordinated at IFAD? And another question was still from Puzzo. She asked, what is the arrangement on lending terms to ensure final recipients are not ripped off? I don't know who wants to answer the 2 questions from Puzzo.
Maybe I can start, and then colleagues can contribute. And also colleagues who are online, I think you can raise your hands to also ask questions verbally, so no need to only write in the text box. So how is it going to be coordinated at IFAD? So there's going to be dedicated staff recruited for this. So from the direct costing of the project, so we included in the TA budget a couple of positions. So we won't need to use IFAD's core resources or core staff for the coordination of this. So we'll have a coordinator and a junior coordinator, and then we also have like a partial positions for different aspects like procurement or financial management or ESM and all of these different aspects that need to be taken into account or will be supported through cost sharing from the project technical assistance budget, but also through the management fees. So that would be the first reaction to Puzzo's question. And the other one, how do we ensure they're not ripped off? So we have done as part of the design exercise. Actually, there's so many elements to the design. We had like 18 annexes, and I think it's more than 1,000 pages, the total package volume. So one of the annexes was an interest rate survey. So we conducted a survey of rural finance costs across the different target markets for agriculture investments for small producers. So what they have to pay for accessing credit through commercial banks, but also MFIs or SACCOs. And we found that it goes anywhere between 10% or even less than that in some concessional loan packages, and then up to 100%, almost like 90-something% was the highest interest rate that we found through the formal markets, and then of course informal markets and less formal financial institutions can offer even higher interest rate than that. Now, what do? Is we require the equity bank and their partners to offer the lending through ARCAFIM with the lowest of the market rate that they offer, and we will monitor that. So there will be another next interest rate survey done in 3 years. So we'll now benchmark against the first one, and then after 3 years we start to benchmark against the next survey, and then another one, and then another one. So every 3 years there will be an interest rate survey, which will serve as the benchmark for the market rate, and then or for the lowest market rate. And then what we'll do is in the quarterly report of the financial institutions back to IFAD, we will include as one of the reporting requirements is the average interest rate or the interest rate in their portfolio, so that we have something that we can compare between the benchmark survey and then the actual report coming back from ARCAFIM. I don't know, Kenji, was that already comprehensive, or did you want to add anything to that? Thanks.
Yeah, thank you, Sauli. So for the second part, I just add some comments. So when the equity bank kind of make a disbursement to the end beneficiaries and borrowers, then they need to basically provide the information to IFAD through we call the inclusion request, because it's basically the request to IFAD to include certain portfolio into the ARCAFIM facility, qualifying loan facility. Then in that inclusion request, they need to provide the interest rate of the loan and also commercial lending rate, which basically means that if they don't utilize the ARCAFIM funding or credit protection, what would be the commercial rating that they would price for the particular loan. So there are two basically interest rate information they need to provide to IFAD. And then that's basically enable us to make sure that the concessionality we provide to equity bank is actually pass it to the end borrower. And in order to do so, what they need to do is to basically establish the pricing model for ARCAFIM, because we provide a credit protection, which actually, give them a capital relief and also the cost of funding benefit. Those benefits needs to reflect it into their pricing model for the ARCAFIM internally. So every time they actually price the ARCAFIM loan within the equity bank, they need to use that pricing, and also they also need to price the virtual pricing if they don't use ARCAFIM funding, so that we can make sure that concessionality is still, passed on to the end beneficiary. And then the first question, how is the project coordinated at IFAD? As Sauli said, we will establish the ARCAFIM coordination unit within PI, one senior coordinator and one junior coordinator. And then those two basically coordinators will basically manage all the admin process, because this facility requires an extensive, the admin process we need to go through, especially for the claim process. Once they have certain, the default, the equity bank submit the claim to IFAD. Then we need to make sure that they actually meet certain, qualification for the, the credit protection, and then those process is required a certain, admin burden for us. So we basically secure those two, staff from the funding from GCF to support the admin work within PI. Yeah. Yeah, that's it. Thank you.
Thank you, Kenji. We had another question on the chat, but maybe I saw that Jonathan Ekwe and Massimo Giovanola raised their hands, so I will allow you to talk, Jonathan. You're the first.
Okay. Good afternoon, colleagues. Can you hear me?
Yes.
Yes. Thank you all. A very brilliant presentation. I am very much interested to see, coming around to find out that we can begin to have this direct relationship with the private sector. But just curiously, please remind us how the selection of Equity Bank might have also been influenced by its experience with the e-voucher program of KSEP-CRAL. Because KSEP-CRAL, there was a lot of political noises around the selection of Equity Bank by other banks. And here is Equity Bank winning this other arrangement, and I'm wondering what the other banks are saying, because it's politically sensitive when Equity Bank was selected for the e-voucher. Thank you.
Maybe I can, Jonathan. Hi, Jonathan. Thanks for a very interesting question. So it was, like I said during the presentation briefly, it's a long process to find out who are the participating financial institution or the lead financial institution for the ARCAFIM partnership. So we started the whole thing already 2 years ago. Actually, we'll speak a little bit more to this process during the second part of the presentation. But let me just try to summarize here. So we took at least 1 year or maybe half a year to identify the partner financial institution, the executive agency for this ARCAFIM project. We interviewed maybe about 10 financial institutions that were reasonably suitable for this operation. And for that shortlisting, we had to ensure that those financial institutions have a regional scope, they have agriculture financing in their portfolio, they have like the type of arrangements in place that enable or make it possible for them to participate in the ARCAFIM. Then we started to discuss with them the potential candidates and who would be most interested, who would be interested. We actually identified a few. I think we identified 4 main candidates, which were, I think I can open it up here. I don't know if that's, I don't know if this is something I can disclose, but maybe I can just say. So we were discussing with Absa Bank, with the Stanbic Bank, with the Equity Bank, and with the KCB Bank. And out of those, the ones that were interested were then took into the pipeline for the possible ARCAFIM partnership. And the one that finally was the only one that was interested in the East Africa portfolio, according to our requirements, that we require investment in the small-scale farming space. We require investment across these target markets. We required that they have to have appropriate ESM mechanisms at place, and we require them to do a climate change adaptation financing, new lending products. So in order for the financial institution to comply with all those requirements, there was actually not so much demand among the partner financial institutions. So we could identify a few. And Jonathan, we are continuously now working with them to make sure that the first phase of ARCAFIM and second phase ARCAFIM and the subsequent phases of ARCAFIM can be successful. But Jonathan, it was actually the opposite. So it wasn't the case that there's like a lot of competition and some kind of political noise for why did we go with Equity Bank. No, it's quite the opposite. The demand wasn't so huge. We even took probably we had a delay of 4 or 5 months just because we wanted to try with one another financial institution who was not responsive at all. Yeah, and I see also Mavira is asking in the chat box, it would have been good to have Equity Bank on a webinar. It's a good point, Mavira. Since this is internal, we did that only with this group, but I think we can do another one later on, Mavira, with Equity Bank participating. Thanks.
Thank you very much, Sauli. There was also Massimo Giovanna who raised his hand, so over to you, Massimo.
Okay, thank you very much, colleagues. It was very interesting presentation, very focused on figures, what we like to see. A couple of comments, a question maybe for Paxina and Sauli as well. Paxina, I heard that you carried out already some risk analysis. I think this is a good opportunity, if possible, to share the results of risk assessment, because there are some discussion ongoing how to integrate some supplementary fund initiative into the IFAD big investment. This could be a good case to understand if you may complementary analysis with some other risk analysis we are doing value chain. For value chain, just for information, the World Bank is asking PARM to create some risk analysis value chain in some African countries. So why not in-house also take advantage from the fact that PARM is based in PMI? This could be a premiere, but I guess this goes in the direction that the president is giving us in terms of integrating supplementary funds within the IFAD portfolio. The other one is for the climate risk transfer insurance, actually, same. Have you considered perhaps, Sauli, to involve some supplementary fund like insured or PARM into implementation phase? Because, you know, we have the expertise in-house. In addition, we also have some experience in some countries targeted by ARCAFIM, Uganda or whatever, with the risk analysis, work made with insurance companies. So my question is, in the implementation phase, when launch would be great, maybe to also have a sort of discussion with the supplementary fund teams. Thank you, and over to you. Congrats again. Very good presentation.
Sina, do you want to go first?
Sure. No, thanks a lot, Massimo. And I think it's a good idea. I think we will have, of course, a repository of the studies that have been done. And also from the equity side, I think they have also requested that if we do have existing studies from our side that can be shared, to also have those on board. So yeah, very good idea to also ensure those linkages. So this is something that we can follow up with you to get the relevant studies that we can share. Thanks.
Yeah, and certainly, yes, I think it will be a good idea to collaborate with the insured and with PARM on some of the aspects of risk management and insurance. There's some demand, or quite a lot of demand actually, from the partner financial institutions to have like best practices of insurance included in some of the portfolio. So, but I think we need more in-depth discussions on that one as well, Massimo. So we can probably, you know, maybe in the early year we can have a dedicated meeting to discuss and see what can be including your both questions.
Thank you very much, Sauli. There was just one remaining question from the chat box from Francesca. She asked, how will equity identify, create the potential credit-ready investees, and can we submit potential investees profiles? And also from her, she suggested maybe to train these banks about the importance of climate adaptation financial products and their impact and financial returns. I don't know if you want to answer, comment. Should
I just continue answering, or Keji, you want to take one for change? I can also. Okay, I can go ahead. So, so how do they create the pipeline? So, like I said, there are 4 channels. The main channels. The one channel is direct financing of micro clients through Equity Bank's branches. Another channel is use of MFI intermediaries who lend to or MFI or SACO intermediaries who lend to their clients. So basically, Equity Bank would be making a wholesale ticket to the MFI or SACO. Then the third channel would be through value chain lead companies. So there may be a value chain lead company that is operating a large ecosystem of primary producers that offer input material to the company. And then the fourth channel is lending to SMEs, so which is not the micro tickets. All the first 3 channels were micro tickets. So these are the primary channels to identify the pipeline for the program. And the Equity Bank has a huge network of branches and agents across the target countries. So that's the primary source. But also we have IFAD's operations, which are like, we have a number of IFAD's value chain program operating across these target locations, which can also identify lending targets or target value chains with the primary producers that require loan resources. And then those value chain projects can also provide technical assistance, which helps to, you know, to build the capacity of them to be more investable. And certainly, yes, colleagues who are here, you know, potential investee profile, since we are targeting like 300,000 people or 300,000 individual clients, I don't think we are able at IFAD to receive like proposals like this and that farmer in the countryside would be interested in the funding. But if you have, like, let's say, targeted ecosystems, let's say there's this region in Uganda where you have a lot of milk producers who require lending, then we could probably take into account such type of a proposal and then pass it to the branch over there who is managing the resources. But we haven't yet kind of come to a conclusion on how we could manage such type of request at IFAD. Probably we are not at very good position to do so, but maybe it will be possible. But we have to see how that all will work. In terms of pipeline identification. Maybe, I don't know if colleagues on the panel want to add to this before we move to the next question. No.
No. That's it. Yeah.
Yeah.
It was all clear sounding. Maybe with that, if you want, we can go on for the next part of this webinar.
Let me see. Right. I was looking at the chat. There's still one more point saying that interesting, not banks interested in the products offered by IFAD.
Yes.
Importance on the trading. I think the point that was made on that it's not interesting for bank to work with IFAD, actually it was because our requirements in this case were very stringent. So we were trying to find a financial institution that fills all the, that ticks all the boxes, and we were not very easy on the negotiations. So therefore, some of the financial institutions didn't show like that they were very interested in that, especially the requirement to provide micro tickets that are very small scale. That increases the transaction cost for the financial institution. That's something that is difficult for many commercial banks, especially the one that operate in multiple countries that are like of quite large scale bank. So, that kind of a situation probably made it quite difficult for some of the commercially oriented financial institutions to participate. Anyway, yeah.
Yes, there's just someone else who asked if you thought of working in Burundi for this. The person works for the project to support agricultural and rural financial inclusion in Burundi, which is financed by IFAD. Do you have any goal to start and work in Burundi for this?
So ARCAFIM so far has not included Burundi in the targeting of in the countries, but of course, as probably who is writing there, that we do have a rural finance project in Burundi already by IFAD Sovereign Portfolio that offers similar type of lending product to financial institutions in the country that can probably fill some of the gap. I don't know if there's a plan to do direct private sector investment in Burundi, but I guess since IFAD will be increasing the volume of non-sovereign private sector direct investments, maybe it can be possible in the future also to look for a pipeline in Burundi, but I can't say much to that. Maybe Stefania or Kenji want to...
Maybe I can add a little bit on this. So right now we have not, in the context of ARCAFIM, we have not included yet Burundi, but there is always the possibility of developing a single country NSO, which is non-sovereign operation. If you have any suggestion or idea of potential investment, please contact me directly and we can see what the opportunities are there. Thank you.
Thank you. There are no more questions, Auri, so I guess we can move on to the next part.
Okay. How shall we orchestrate? Should I go ahead? Yeah. Okay, I can go ahead first. Okay. So we wanted to take divide this presentation to two parts. One was on the ARCAFIM structure. Now the next part will be to speak a little bit openly about how it was to design such type of a. Someone said monster project. Someone said it's a most innovative project. Someone said it's like the largest financial sector project. Someone is saying it's the largest private sector operation. So it's like many people are having different opinions about whether about ARCAFIM. But anyways, we can confirm that it was very complex process, and it took a long time to get to here, to get to the launch of the ARCAFIM. So let me just go through a few steps, and then I hand to Kenji and Paksina and probably Stefania for some concluding piece on that from the management point of view. So firstly, the early structuring already started maybe 2.5 years ago. We started to develop the concept node slowly, to come up with the idea or a little bit more details of the idea around the idea of how this could look like. And then very early on, what we started to do was the fundraising. So actually, we didn't just structure the project because IFAD wants to structure it this way, but we actually took a little bit the approach that what financing would be available, or what kind of financiers would be interested in financing this, and what would be their requirements in order to be able to come in as co-financiers. So we talked with quite a large number of possible co-financiers, and then we entered into in-depth discussions with the ones that we identified that were highly interested in the project, which were the main ones: the GCF, the government of Finland, the government of Denmark, and the Nordic Development Fund. So those were the key partners also in formulating some of the key areas of the project structure. Then the next actually parallel process was the identification of the bank, or the main partner. I already actually answered to Jonathan's question there, so maybe I don't repeat myself, but just to say that also like large part of the structuring of the project was also somehow relying on the capacities and the qualities and the basic requirements that the partner bank would have in order to do such type of things. So basically, it was like IFAD, the financiers, and the executing partner, and then of course the demands from the ground. We did like a number of assessments on the demand side. Already at early concept node stage, we did the first landscaping of climate finance opportunities in target countries. We did that like 2 years ago or something, with some group called Financial Sector Deepening. They did an assessment for us, which helped to inform the early concept node and the early ideation of this project. And then what happened also in the beginning, around during the same time when we were doing these discussions with the different co-financiers, was like we started 2 mini projects. One was climate adaptation finance pilot in Uganda, which was funded by the Danish embassy. And we still continue to implement that one, and it provided us with quite a lot of resources to do all kind of background studies and hire consultants and do things in Uganda, which helped to inform the Uganda specifics, but also the regional. And then another one was something called Booster Grant from the NDF, because NDF were interested in participating in the program. They also offered us some resources to conduct the design. So we had like these design resources from externals, and we still keep having them. So we still keep doing like capacity building and the documentation phase and all of that. It continues to happen. I think Kenji will speak to the documentation phase, whatever that means, in soon. Then we finalized the concept node. We got it through approvals, so many approvals. We had to get it approved by IFAD, get it approved by GCF, get it approved by the other co-financiers, and the different steps of the approval. So it was like quite a hurdle because of this multi-donor or multi-financier nature of this program. So everyone had to agree to the basics of the concept node. So it went through everyone's reviews and boards and technical everything. So it was a long headache there, but we passed through all of those and then took a little bit of breath and then continued to the actual design stage. Then what we did, we actually hired 4 institutional service providers during design. So it was 4 of those procurements that some of you who know work for IFAD know how that is. So we did 4 institutional contracting to do different aspects of background analysis, and then we hired a number of consultants, and then we worked a lot by ourselves on the design process, and got that one done. It took us maybe some months, maybe 3-4 months to finalize the design package, but then it took maybe almost a year or maybe let's say 8 months or 9 months to go through all the reviews process, including the the initial review of GCF and IFAD and the NSO process, the IFAD's non-sovereign operation review process, then the reviews of all the co-financiers and their technical feedback and comments, and then finally everybody's board approvals, and then finally the launch at COP 2 weeks ago. So it's been a long journey, I have to say. First the concept note stage and then the design stage. But good to be here, and I guess the next steps will be mostly actually managed by Pai, so I'm glad to hand over to Pai the documentation phase. So I don't know if you want to speak to that piece, Genji, and then of course Paxina also, because there's also all of this ESM aspects has been a very large piece as well, but Genji and Paxina will speak to those.
Yeah, thank you, Sari. Just to show how complex the approval process is, I just share the kind of the time schedule that we usually present it to, all the donors. So, in order to manage, 5 different approval process with a different institution, first we need to identify the front runner. And then the front runner means that, which has the heaviest review process and also takes a lot of time. And then also, having a certain credibility in terms of their, approval, their stamp. So we kind of decided to let the GCF, take a lead on this review process. So we basically try to focus on the GCF review in the first place. So as some of you know, that the GCF required us to submit the package 6 months before the board date. We basically targeted the October board. So initially we tried to submit the package 6 months before October, which means April. However, we couldn't actually submit the full package to GCF in April. April, we just submit we couldn't submit anything. And then in May, we submitted a full funding proposal, but without, certain annexes are still missing. Then early June, we submitted a full package to GCF. So actually, at this moment, we already a little bit behind the schedule by 1.5 months. So then GCF, provide the interdivisional review notes, which is almost 60 pages, many comments, but half of them are more or less kind of, relatively easy comments, but half of them are quite heavy. So it took almost 1 month for us to respond to the first batch of the comments. Then we did, 3 rounds of the interdivisional review from GCF from June until very right before the GCF board submission. So then after they finalize, they are comfortable with the contents, then they started their internal, committee, CIC, their investment committee, then the ITAP externally independent technical advisor panel, the second investment committee, and then those are pretty much happened within 1 month. So it was quite difficult for us to manage the timeline, because usually they ask us that, send a question, then request us to respond within 24 hours, and then which sometimes difficult to respond. But we try to basically keep the momentum and try to address as much as possible. Then once we get a GCF board approval in October, once we get the approval from GCF ITAP, then we also initiate our IFAD internal process, because we have a clear visibility on the GCF approval, so that we are ready to initiate the IFAD the internal approval process, and also Nordic donor also start the approval process. Then, we set the target before the COP. All the donor and IFAD needs to obtain the approval in order for us to launch the ARCAFIM project during the COP. So, everybody has a very clear target and then try to meet the deadline. And after the GCF approval, we had an informal seminar right after the board approval. Then we obtained the board approval through the vote by correspondence. The reason being is that the December executive board is gonna take place after the COP. So we decided to obtain the approval through the vote by correspondence before the COP. So it was a quite cumbersome process, but I think there are two important elements in order to manage this whole process. From my perspective, one is identify the front runner, basically who is gonna take the review process first. Then also setting the clear timeline, which in this case was the COP28 announcement. So I think in the end it worked well, but I would say it's a quite cumbersome process and requires a lot of coordination.
And this was only the approvals, the design stage. Before that had happened all the everything else. So anyway. Yeah. Stefania, want to come in?
Yeah, so actually just to add to what both you and Kenji said, indeed it has been quite a time-consuming process from many points of view. So first, one thing that also we have to say is that this has been the first risk-sharing facility that we have done in IFAD. So we weren't aware exactly at the beginning. We didn't have probably the awareness of all the work that this process would have required. And also we didn't have all the processes and guidelines in place. For example, we didn't have a process for submitting NSOs to the GCF. So this has been something that we needed also to work in parallel on this. Then there was also an issue of capacity and resources. So we've been, it was very good that we have received funding from the NDF and then also from Denmark to design. But before embarking into such a process, it is very important to make sure that all resources and the capacities are in place to design something that is so complex. Another issue that we have faced is also the fact that we have approached donors with different risk appetite, and this has sometimes created additional layers of conversation and made agreeing on the final structure a little bit more complicated. So maybe in hindsight, in the future, it will be better to try to target donors with the same type of risk appetite, so that we don't have to try to find to align a different type of resources and interest, because this makes structuring even more complicated. And what else? So that is, and the last point probably that is also important to remember is that IFAD didn't put any skin in the game in this investment. So we provided in the end technical assistance, but nothing in the investment envelope. And also this, in the end it worked well, but it has been challenging also for other donors to understand why IFAD wouldn't put skin in the game, and then may also in the implementation be something that we need to keep an eye on. So in the future, I mean, also IFAD needs to have resources to put on the table. And well, fortunately, just yesterday, the replenishment consultation approved the 90 million proposal, 90 million resources from IFAD 13 for the private sector financing program. So probably in the future we will be it will be easier to design these co-investment platforms on a different basis. Thank you.
Stefania, that was a good announcement. I don't know if people around this table know about it yet. So right now the replenishment process is ongoing. We're actually competing with them. That's happening in another stream. And yesterday was, I guess, they structured the IFAD 13. Today is the pledging. So now we know from you. I didn't even know. So they agreed to put 90 million into PSFP. Whoa.
They agreed on the replenishment report as it is, including the proposal of the 90 million plus 18. So it's 90 million from borrowed resources plus 18 from the core non-country grant envelope of IFAD 13. So it's 108 million in total.
Which we can then use to leverage, like even this ARCAFIM would have been much easier if we could have put 10 million of IFAD resources, so we can have many more of these.
Yeah.
If someone has the energy to develop them. When, of course, we'll have many of them. Thanks.
Okay, can I finish then with the, so just on the process for the environment, social governance aspects, and I think as has been introduced by my colleagues, it was one of the sticky points that we had, particularly with the review from the Green Climate Fund. We had started the process with due diligence of particularly the host bank, so Equity Bank, looking at the environment and social management systems that exist in the bank. And then we also tried to interview some potential participating financial institutions so that we can then develop the guidelines that I was talking about, or the guidance that I was talking about in the environmental social management framework. So the whole process, again, took some time. We divided the work to one consultant who was fully focused on Equity Bank and looking at their systems. And in the end, we developed an environmental social action plan for the bank to be able to follow. So we have an agreed plan for the implementation stage. For the participating financial institutions and also the end-line beneficiaries, so those that are going to be making the investments, they're the main ones that are going to be making use of the environmental social management plan that I also talked about. So part of the implementation will entail, once the participating financial institutions have been selected, we then have to screen or look at their environmental social management systems. We did see that some of them, the ones that we had interviewed who are potential, from the region, have some starts of environment management systems that are already in place. So they have some policies. They also have, in a sense, a few team members that work, but they would not. These systems would have to be strengthened. We found particular weaknesses on the gender side. So on the social elements, the risk management there, and gender and social inclusion, the potential participating financial institutions did not have strengths there. So this is part of the technical assistance that is going to be provided in ARCAFIM. Will strengthen the environmental social management systems for the host bank, but then also for the participating financial institutions. And I think in one of the questions that has been asked on the training and the capacity building on climate finance and adaptation finance, this is part of the package that will be offered under ARCAFIM and the technical assistance that we have. So as a result of our screening, we settled on the risk category for environmental social as being moderate for ARCAFIM overall and the activities. But on the climate side, the risk classification was substantial, noting that the countries that we're going to be working in, they have already been losses that our end-line beneficiaries have experienced as a result of climate shocks. And so of course, our aim is to ensure that we can provide the resources for them to invest in climate change adaptation measures. So our social environment and climate assessment procedures, our SECAP, requires that each time we're working with a financial intermediary, they should have environment and social systems and procedures, also the capacities for assessing and managing and also monitoring the risk and its impacts, but they should also have adequate portfolio risk management frameworks that will ensure their return on investment and the sustainability. So these are some of the elements that we had, that we have included. For the Green Climate Fund, when we submitted, as Kenji showed through the processes, I think the environment and social aspects plus the gender annexes were part of the last set to be submitted. Number one, they took us a lot of time with the consultations to be done and also coming up. So there were two firms. There was a consulting firm that helped us in developing the gender and social action plan, or the social inclusion action plan. And then the consultant that I mentioned, an individual who was looking at the host bank. So to bring those two layers together took us some time. But also the Green Climate Fund found quite a few weaknesses in the environment and social management framework. These were linked to conflict assessment. There's conflict sensitivity assessment that they requested us to do, which we had not anticipated. They also requested us to do an indigenous peoples planning framework, mainly because both Kenya, or in the countries that we're going to be working in, they are peoples that identify as indigenous peoples. So they also wanted us to ensure that we can provide a framework. And then also on the gender side, they were not very convinced of our actions, and also integrating the cost elements for these actions to make sure that the gender elements are not left behind, but are fully integrated into the ARCAFIM implementation. So in terms of lessons, of course, as colleagues have said, we did learn quite a few lessons in the preparation of the documents. Of course, even in the approach, using a consulting firm did not, in the end, work to our benefit as we had hoped. I think if we had had individual consultants that focused on key themes, who are used to working with IFAD, but also accustomed to some of what is required from the GCF, we do feel that this would have perhaps been a better strategy, because we had to get two individual consultants in the end to improve the documents and support us in making sure that we had good quality. Thank you. Over.
Yeah, some of the institutional contracts worked better. Some of them didn't entirely do the trick. So I guess one has to try to strategize next time which ones one can do by individual consultants and which can be done by companies. But not an easy call, actually. Quite a tricky thing to manage. I think we have a question from Jonathan.
Yes.
Yes, thank you very much. I think one of the questions, Maxina just responded. She took the question from me, because I was going to ask, why go through some other companies when IFAD already has consultants that know our mainstreaming themes and can cover them perfectly? You know, I mean, I hear the two of you saying, who was imposing on you to look for service providers from elsewhere when you have a list of your own type of consultants? That's the very first clarification that I will need. Why did you have to go somewhere else before coming back to your consultants? It's a simpler of the two questions that I want to ask. The more difficult one, and I hope Maxina and Sauli, you guys can help me out. What are the lessons both of you learned from this private sector thing compared to AGRIFIN 2? Why is AGRIFIN 2 marking time? What is it that you guys can advise on AGRIFIN 2 to make it better and faster than like you did? Thank you.
Actually, I have more knowledge on AGRIFIN, so maybe you can explain the differences. But let me answer the first one first. The question, Jonathan, on why to use companies. Basically, we thought, because actually in the beginning we thought we'll do the East and the South in one go. So we thought that we don't have 4 countries, we thought we have 9 countries. And then we thought that if we have 9 countries to scout, it's better to try to do work packages and then hire companies that can have like representation in each of the countries to do some of the work on behalf of the design process. So we thought in the beginning we would do a combination of hiring consultants and such type of institutional contracts. And like I said, some of them worked well, like for example, the climate risk mapping and the climate change assessments of investment types was quite good through a company. Also, the interest rate survey and the demand and supply analysis for climate finance was quite good to be done by a company in each of the target countries because it's such a huge work. But the ESM point was maybe a bit more difficult because it's so much like you need the certain IFAD standard and you can't really do it as a general job. It has to be done more like a detailed focused job on against IFAD standards and GCF standards. So probably would have been better, like Baxina was saying, to hire a consultant straight away rather than try to go through a company. But it really depends on a job. That would be my takeaway from this last couple of years. I don't know, Baxina, if you want to talk to iGreenFin or you want me to.
So maybe very quickly, Jonathan, I think we did have, of course, some of the lessons that we have learned maybe from iGreenFin 1 going into iGreenFin 2. Perhaps some of the lessons, I think this time around, I think for ARCAFIM, our studies were more targeted. We kind of knew what the building blocks were that we needed to get the package done. And I think that really did help. And I think number 2 is also in terms of course, also the relationship with the GCF, right? And I think Kenji will attest that the task managers that we had for ARCAFIM were very responsive, and they were also there to kind of have a give and take with us, which has not always been, I think, visible enough in for iGreenFin 2. So I think the ARCAFIM was given priority also from the GCF side. I think it was something that they were very interested in. And so that also helped us along in making sure that, yeah, we could have even some of the leeway that Kenji mentioned that we had planned and had specific deadlines to meet. But we negotiated with them when we didn't have the full package. And they also gave us a little bit of flexibility to be able to get it through. So there was quite a lot of support also from that end. Thanks.
Maybe another point that is different between ARCAFIM and iGreenFin is that iGreenFin, to my understanding, I'm not so much aware of how the structure is, but my understanding is that it's like many sovereign loan agreements. So it's like you do with each country where it's targeting a separate loan agreement with the government, including the co-financing amount that is leveraged through existing portfolio. So I guess that makes it quite a complex process, I could assume. And the other one is that you try to identify each of the countries with a dedicated financial institution in each country to invest the type of lending instrument in each country, rather than when in ARCAFIM we just negotiate with one bank that can deal in each of the regions countries, and they can then coordinate their subsidiaries in each of the countries from the head office. So in a way, it's a kind of we took probably a more simple approach for the ARCAFIM compared to the iGreenFin. And then lastly, maybe I guess you have more like a environmental protection approach also in iGreenFin, including the anti-desertification type of investments, which we expect the smallholders to finance them with a loan. So in a way, the expectation is that smallholders will protect the environment through a lending resource, whereas in ARCAFIM, the main target is the adaptation of the farmer to climatic changes so that they can continue to preserve their livelihood. So maybe the demand side also is a little bit easier to manage in ARCAFIM compared to the iGreenFin. So I think there are many aspects that are somehow different and which can be compared later on when we can do some analysis at some point on the differences between the two projects, which are somehow similar but yet quite different.
Thank you very much, Soli. I guess we've reached the end of this webinar where we've already done 1 hour and 30 minutes. So I guess, Soli, if you want to do some concluding remarks.
No, I think I don't know if anyone wants to. Maybe Stefania wants to say anything in the end, or Or
Well, no, thank you very much. I mean, everybody for participating to this seminar. There are many lessons learned indeed that ARCAFIM bring to us, and probably we were thinking yesterday also with Kenji, we need somehow to capture all these lessons somewhere, and also probably have more of this type of interactions so that we make sure that these lessons learned can be used for future design. So thank you very much, everybody, and so happy holidays soon.
Thank you very much, Stefania. And yes, I on behalf of PARMD and the Inclusive Rural Finance Network, thank you all of you. Thank you, Paxina, Kenji, Stefania, of course, you as well, Sauli, for participating. And I wish you all very good holidays and a good rest of the day. And see you next year for another loads of webinars. Goodbye, everyone.
bye-bye.